All right, good morning, everyone. It is 7:37 on the morning of February 16th, 2023, and this is my pre-market strategy session. So the title of today's video is QQQ Resistance at 313.25. And so originally, I came up with this range back here, after the sort of recent 8 weeks of price movement. Actually, it's been 6 weeks of price movement. And I was like, okay, what's the range? Where's our support and resistance? We had a little bit of a move sideways here over the past 1, 2, 3, 4, 5, 6, 7, 8 months, 7.5 months. It deviates from the range a bit. You can see here it went lower. But essentially, the main part of the range that I'm looking at here this is a monthly chart, is the close of this gigantic breakdown candle right here. This is a almost completely solid red candle. That's heavy selling. That's April of 2022, and it really just sold off big time, right? That's important. It's an important candle. So it's like, okay, so the bottom of this candle right here is going to be, if the price of the Qs are below it, that's going to be resistance. And then here we have sort of I've forgotten the name of the red-green. Well, the body of this green candle right here is larger than the body of the previous red candle. And that's not exactly like an outside reversal. I don't really use monthly charts on an outside reversal. And also, there's a little bit of a wick down here at the bottom of June 2022 that this big green candle does not cover, I guess you could say. I mean, if the month started down here at the wick or just below the wick and then went all the way back up above the top of the candle, that would definitely be an outside reversal. This is just a point where price found support and buyers came in, sellers started exiting their positions. It got overdone here in August and then fell back down again. And then some price support on the Qs came in down here in this 263-ish, 265-ish area. And so now we're headed back up. And so January, February, and March just tend to be bullish months of the year. That's just kind of the way it is. Of course, there are exceptions here. We have January of 2022 that was fairly red, February of 2022 that was fairly red, and then also March turned out to be green. But generally speaking, in a bull market, January, February, and March are bullish months of the year. And so this year, we've got January really quite bullish, February also really quite bullish. And then, there's the rest of February to roll out, there's only like 2 weeks left. 1, 2, 3, 4, 5, 6, 7, 8 trading days left in February, and then we roll into March. And essentially, though, what I'm looking for, and this may not happen this month, this monthly candle might close lower than where we are right now. It's hard to say. There are a couple of things going on here. Of course, there is this price resistance from this big breakdown candle happening right here at 313.25. But then also, I put on a Fibonacci of the retracement here. So this is the top that was in November of 2021, down to the bottom that was put in October of 2022. And the Fibonacci, the 38.2 Fibonacci, which is an important Fibonacci, lands at 313.26. So the bottom of this candle here is 313.25. The Fibonacci is at 313.26. And it looks to me like we are going to challenge this 313.25 area. Before February, we're going to challenge it again. You can see back here the first trading day. No, that's the second trading day. Second trading day of February. But we had a high of 313.68, and then it closed back below this Fibonacci level, and that the top or the bottom of that big breakdown candle, which occurred in what was that again? August? I've forgotten. Let me go back to the monthly. April of 2022. Wow. Even further back than August. 4 months further back than August. Okay, so yeah, and if we can manage to break out of or break up above this 313.25 and come back and retest like today, that would be huge. I don't exactly expect that to happen in one day. However, it is possible, right? I am bullish. I think that there is some time left in this market to make money to the upside, and it really will be just a matter of time until we start coming back down again. But in the meantime, you want to be in the correct direction the market is moving, even though it's not in trend right now. It is technically still a bear market. This is contrarian to the overall trend. The trend is your friend until the end, except for when you get these bear market rallies. It'll rip your face off if you're trying to short the market. So I'm just staying flexible here. I have a straddle on at 303 for monthlies that end in April, the third week of April. And right now the trade is green. It's nice and green. And in fact, I'll probably, if we can hit 313, I'll probably take profits, because at that point I'll have made a double on the trade. That's really what I'm looking for. I am definitely looking for a touch off of 313.25, and sooner rather than later would be really good for me. So we'll see what happens. But yeah, that's really kind of in a nutshell what's going on for me right now as far as trading goes. I've really kind of let the single stock trades. I really haven't been trading single stocks now for over 6 months, and have been sticking with just trading the indices, and it's working out for me. Pretty steady profits. It's nice, so the more the more coincidences you can get at a price level, the more people you'll have trading off of it. If we break above 313.25, I expect it to be a rather violent break. I expect there to be, a significant move after the break of 313, and in one day. So if it happens today, I'd be a little bit surprised, but anything can happen. But the day that it does break up above this 313.25 is going to be a significant. There's going to be a significant move, and also let me kind of zoom in here a little bit. Let me get rid of this. There we go. And if the more coincidences you can stack up at a certain price level, the better. Of course, we have this month over here. My drawing tool. Let's see if I can get that better. Yeah. Well, let's. All right. Well, so we have a little bit of a close below here on the month of May. It popped up above, went to the halfway mark, the 50% retracement mark right here, and then ducked back down again, couldn't make it, and went down below the 38.2. Then we had a touch off of the 38.2 Fibonacci level here in June, a move above, which then failed on the next week, hit the 50% level again, and then decided to go down. We hit the bottom, and now we are making our way back up. So, come on. And so, let me get rid of volume here. It's kind of in the way. This is the setup that I'm seeing. So right now we're really basically making our first touch for the month off of the 38.2 Fibonacci level. And if we look at the daily, actually let me go back to the daily here. If we look at the daily, it looks to me as though we're attempting to make another touch off of 313.25 sooner rather than later. I have a position on, I have a strategy on, and I'll trade around that according to what my charts are telling me. And actually, let me go to something else. Okay, here we go with the relative strength indices. Pre-market trading is certainly in comparison extremely light as compared to the intraday trading volumes. We're starting out really close to oversold in the pre-market on the 1 minute and the 10 minute. My guess is, and this is just a guess, that we sell off a little bit in the first hour, and then buyers will step in after the first hour and start making the market moves. The VIX is really close to overbought. It's certainly a lot closer to overbought in the 10 minute than it is the 1 minute. And so seeing the RSIs move into overbought in the first hour and then start coming out of overbought after the first hour on the VIX, and then the same thing with the Qs, but in the opposite direction, seeing it go into oversold in the first hour and then come out of oversold after the first hour. It could even be half hour. It may not even be an hour. That's going to be a bullish trade. That's the closest thing I have to set up right now. My signals, of course, these signals aren't lined up toward, in accordance with the strategy that I like to use right now. I expect to see something in the first hour of the trading day today that will be a setup. Maybe I get it, maybe I don't. But that's the setup that I'm using. That's the strategy that I'm using. That's the strategy I'm going to stick with. So oil, if we're going to get, so there's a warning out there that we're going to get another gigantic round of inflation. And if there's anything that can fuel inflation, it's energy prices, increases in energy prices. And so the way oil to me is looking right now, and because of sort of geopolitical activity that's taking shape with, China is threatening to invade Taiwan. Putin has just armed, according to Norwegian intelligence, Putin has just loaded tactical nuclear weapons onto, I think it's some of his boats, some of his Navy vehicles or something like that. And that's in response to NATO and the NATO allies sending anti-aircraft weaponry and tanks, to the border, to Ukraine. It's crazy. And then there's even a possibility that we send jets to Ukraine. It's absolutely crazy. It's just crazy. There aren't Ukrainian jet fighters who are ready to go to combat in F-16s once those F-16s are delivered. And the same thing is true with the anti-aircraft weaponry and tanks. The people who are going to be crewing those vehicles are most likely not going to be Ukrainians. They're most likely going to be, NATO and U.S. backed individuals. So things are kind of stacking up again to see once there's an increase in armed conflict. I think the oil is going to start going through the roof if it comes down to that. And watch out inflation, because energy inputs into PMIs and just everyday, even PCEs, is going to be insane. PPI, PMI, so it wouldn't really contribute to PMI so much as it would to PPI, sorry. But yeah, God, there's absolutely no reason for this war at all either. It's atrocious. God, I'm praying for peace. We really, this is just absolutely totally unnecessary what's going on right now. And if there's anything that's going to damage the market, it's going to be, increase in if there's anything that's going to damage the possibility of putting this as a bottom end, because this technically, what we're seeing here in the Qs could be a bottom. In fact, I think that if peace in the Ukraine was declared today, I think we'd see an all-time rally of rallies. It's my opinion. This could be a nice little rounded bottom for things to kind of float, from bottom left to top right for a sustained amount of time. Yeah, there are problems. There are always issues in the market. I mean, there's always a case to be made for the bullish and the bearish side of things. Mostly, sovereign debt and just craziness, right? But war is not, especially a nuclear conflict, that is not going to be good for anybody, really. It's just I don't know why there's so many people in the West pushing for it. All right, everybody, good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. Thanks for tuning in. I am out.